I think what's really interesting about the bulk data is it tells us a little bit more nuance in the freight market, because it's, one of the big backstories that we hear in these public reports around trucking is the fact that this is not a demand-driven recovery, it's a capacity-driven recovery. The rail data actually challenges that thesis. At least right now, it's telling us that there is demand poured into the economy that isn't related. I mean, a lot of the commodities that we're talking, these big bulk rail commodities, do not move over long distances on trucking. Like it's a non-fungible commodity. Trucking is not competing to take a bulk freight off on long distances. Therefore, that's why it's such an important indicator of the overall demand that we're likely to see in trucking in coming months.
Right, and to your point too about an industrial renaissance, John Brooks, who's the chief marketing officer at Canadian Pacific Kansas City, he said at an investor conference last month that ongoing trade uncertainty in North America has frozen some investments. Companies eyeing plant expansions or new plants, either in the U.S. or in Mexico, they're kind of holding tight for right now until there's more clarity on what happens with the North American trade agreement. And then the other thing is there's a slight asterisk on intermodal volume. When you see them up double digits, and it's been a really hot June in terms of intermodal volume. Intermodal analyst Larry Gross points out that there's the year-over-year easy comparison issue going on here because of the rush of the front loading of goods last year to avoid tariffs, particularly the China tariffs. And so the numbers today are being compared to the big intermodal lull that occurred at this time last year. That said, the way Larry looked at it, he said the increase is probably more like 5% rather than the 10% that we're seeing. But 5%, we'll take it, especially after the traffic trends for the past 3-4 years, right?